Getting a home loan does not require you to have absolutely perfect credit. You may be able to have a collection in your past and still get approved for a mortgage. It all depends on the type of debt you have, how much is there, and the type of loan you're attempting to get. Hello, I'm Melissa Arntzen with Element Mortgage. This is Mentoring with Melissa, and this video will cover if you can buy or refinance if you've ever had collection accounts in your past. Let's begin by talking about how collections will affect your ability to get a mortgage. Mortgage lenders depend heavily on your debt-to-income ratio. One of these ratios deals with your potential housing costs and your gross income each month. Your debt-to-income ratio lets the lender understand how much you can afford. The other deals with your total debts and payments each month. These monthly debt payments include credit cards, student loans, car loans, child care, child support, and the added mortgage you're applying to get. The magic number for most lenders is a debt-to-income ratio, or DTI, below 45%. Next, let's talk about derogatory or late credit and how it can affect your ability to qualify. When determining approval for a mortgage, lenders may cap the amount of derogatory credit that you can have in order to qualify for the loan. This includes items like collections, charge-offs, judgments, and liens. Collections and charge-offs are not usually figured into your DTI unless you're currently making payments on those accounts. Tax liens and judgments are two items that must be satisfied before you can be approved to close on your home loan. Those with tax liens may be able to close if there is a repayment plan set up with 12 months of on-time payments. Next, let's talk about what to do with collection accounts. We'll begin with new collections. Before you do anything with any collection account, you should always check with your lender. If you're going to pay off any new collection account, you want to be sure that get a detailed payment arrangement in writing before paying it. The arrangement should be detailed the total amount that you're paying, the number of payments that you will have to make, when the payments are due, and collection fees or interest added, and what will happen at the end of your payment term. How about older collection accounts? The first thing you need to do is make sure this collection account on your credit report is yours. Are you sure you owe this account? If not, you need to send the request to all 3 credit bureaus asking them to delete the account. If you have determined that the information on your credit report is correct, it's time to figure out what you're going to do with that debt. Paying off old collections can do more damage to your credit score than good. While it's great to get your credit report cleared off, paying off old collection accounts will bring the report current. This can drop your credit score and affect your ability to get a mortgage. The only way paying the account will help is if the creditor agrees to remove the collection from the credit history, called pay to delete. Also, understand that some loan programs allow you to have a certain amount of collections and still be able to get the loan. Don't reactivate the account. Having collections on your credit score can do great damage, but the effect those collections have on your credit score diminishes over time. When you start paying off old debts, you bring the account current and to the forefront again. Let's talk student loans. If you have student loan collections, you will want to check with your lender to see if you qualify for a mortgage. Defaulting on student loans can put a hold on the dream of homeownership. Federal student loan debt is never dischargeable and does not have a statute of limitations. FHA mortgage loans will certainly not be approved for anybody with defaulted student loans. If you have defaulted, there are options to get you back on track. These include loan rehabilitation, loan consolidation, and repayment in full. What about medical collections? With medical collection account, credit bureaus must remove paid accounts from your credit report within 45 days. Negotiate with these credit agencies in writing and wait for a signed agreement before paying any account. Mortgage underwriters may require that all old collections be paid off or may not be required, but they will likely ask for a letter in writing about why the collections began. Knowing where you stand and getting a handle on your credit report early is important. But know that while challenging, it isn't impossible to get approved for a loan with collections on your credit report. The most important thing to do is to know what's on your credit report and create a plan. Be sure to get your questions answered by a licensed mortgage professional. Thanks for watching. This is Mentoring with Melissa. I'm Melissa Arntzen with Element Mortgage. If there's anything we can do to help you, please do not hesitate to contact me at 916-316-0672. We're here to help.